Hi, this is Jim Hyrechek, and welcome to the Tips to Improve Head and Shoulders Chart Pattern Searches. Before we start, we're going to look at a disclaimer, and then we'll get right into the webinar. The AutoChartist service includes chart pattern identification in respect of foreign currencies, commodities, equities, and stocks. There are potential risks relating to investing and trading. You must be aware of such risks and familiarize yourself in regard to such risks and to seek independent advice relating thereto. You should not trade with money that you cannot afford to lose. The AutoChartist service and its content should not be construed as a solicitation to invest and/or trade. You should seek independent advice in this regard. Past performance is not indicative of future performance. No representation is being made that any results discussed within the service and its related media content will be achieved. All opinions, news, research, analysis, prices, and other information is provided as general market commentary and not as investment advice. AutoChartist, MDIO software, their members, shareholders, employees, agents, representatives, and resellers do not warrant the completeness, accuracy, or timeliness of the information supplied, and they shall not be liable for any loss or damages, consequential or otherwise, which may arise from the use of reliance of the AutoChartist service and its content. Okay, today we're going to talk about the Head and Shoulders chart pattern. Seems to be a very popular pattern, simple to understand, and because of its visual appearance. When you look at it, it's visually appealing, very aesthetic, and fairly easy to spot. And what AutoChartist has done with its software is it's provided the user with a fairly easy way to search and find this particular pattern and to take advantage of the breakouts that occur, and to try to use it for a profitable trading opportunity. Now, one of the things that we should realize when we work with the Head and Shoulders pattern is that it is one of the most reliable chart patterns. It's got a clear, distinct pattern, and the Head and Shoulders pattern is typically a topping pattern, so it's also called a distributing chart pattern. It consists of one final rally, which is the head, and it separates two smaller, although not identical, rallies or shoulders. So if we look at a photo of what a Head and Shoulders pattern looks like, this is just a simple scratch drawing of typically what this pattern should look like. We see that we have the left shoulder, which represents a up move or an uptrending market, and then we see this final thrust to the head, which represents the final movement in a bull market. So the left shoulder is created during an uptrend, and then the price retraces back down almost 100% of the entire last move into this head, and then it makes one more attempt to rally, and when this fails, this is the warning sign right here on this right shoulder that the uptrend is beginning to turn weak. Now, the Head and Shoulders pattern is a bearish reversal chart pattern. You can see evidenced by the fact that we do have this uptrend, is evidenced by higher tops and higher bottoms, and then we start to see this downtrend. And typically with trend analysis, once you break a previous swing bottom, you get the change in trend, and you get your movement to the downside. So basically, if you want to look at this pattern, you'll see that it finishes an uptrend and it starts a new downtrend. So it's all connected with the shoulders and the head. Now, when looking at this pattern, you should consider volume as a critical importance in assessing the validity of this pattern. Activity or volume is normally heaviest during the formation of this left shoulder. This is typically what happens is you get the buyers who miss the bottom and want to try to catch up to this market, and they start to chase the market higher. and at the same time tops or shorts who had tried to pick the top previously begin to cover. So you start to see this final grand rush to the upside as the market begins to move higher towards its final destination. Okay, you should also see quite heavy volume as the prices approach the peak or the head of the marketplace. And you'll see that when you have up moves, you also have a characteristic of wider trading ranges near highs because it's almost as if everybody has now finally recognized the trend, or those final traders have recognized the trend, and they're trying to catch on after the train has already left the station. In the right shoulder, what happens here is now that everybody's long, when this right shoulder forms after that decline, there isn't that same buying flurry because everybody who wants to be long is already long, and they're just waiting for the next move. And so typically when the right shoulder is being formed, you see a distinctly lower volume. Now when you look at this pattern in terms of trend, as I mentioned before, the left shoulder is what they call the penultimate advance in a bull market. So it's not the best advance, but it's the next to best advance. The head represents the final rally in a bull market, and your right shoulder is actually a transition, a point where we're transitioning to the first bear market signal. As we go through our slides, we see that this is the typical chart screen for AutoChartist. And before we begin to talk more in detail about AutoChartist's head and shoulders chart pattern and how the program works and finding this pattern, I thought I'd go through some of the steps that are involved in finding, setting up the filters to find this pattern. So the first thing you want to do is on this screen, you'll see that I have set up in this search area here Head and Shoulders Commodity or Head and Shoulders FX Majors and Head and Shoulders Stock Index CFDs. Okay, in this particular case, this is a chart pattern of Head and Shoulders chart pattern of the silver market. So I've identified that as commodities. So in order to get to this step, first thing you're going to want to do is click on this new search button. When you click on the new search button, you're taken to a screen that allows you to begin filtering. So you can select the markets that you want in here, either a group or an individual symbol, and then you can name it whatever you want to, whatever helps you identify what you're looking for. Then you advance to this, or you hit this advanced search button, and this takes you into another area where you're able to look at various filters that are available. One such filter, which isn't relevant in this case, is price range, and the next one is direction. And we're going to focus on direction. Since we know that a head and shoulders pattern is typically, or it is a topping pattern, as I said before, or a distributive pattern, we want to filter out all other patterns. So we're going to select bear pattern, or patterns that suggest down moves or bearish moves. Okay, we're not interested right now in whether this market is a continuation or a reversal pattern. We just want to make sure that we have clarified our search for bear market patterns. Next step that you want to look at when working with this pattern is you want to look at your quality indicators. And as I mentioned before, you have a volume as being a key factor in determining the movement of this particular chart pattern. So one of the things that you can do is you can adjust your volume slide bar here, and you can begin to filter or do some research as to what level of volume affects the chart patterns that are being found or being filtered. So if you look here, if you start with a 0 search, you're going to get basically a low or flat volume. And if you look at this, if you set it at 10, you're going to get an increased volume. That's how the scale works. So you can select any one of those numbers, and oftentimes traders start with a 5, try to get an average volume to determine if it has any kind of effect on the types of patterns that are coming out. See if they improve the quality, or if they limit the amount of searches so that you don't have to go through a big list of trade suggestions. You also have the opportunity to adjust the minimum initial trend, your uniformity, your breakout strength, and your overall quality as well as clarity. Now, if you're going to look at Forex markets, it's not applicable, or the volume indicator is not applicable to Forex markets at this time. But if you're looking at index, if you're looking at stock CFDs, or if you're looking at commodity markets, you can make the volume adjustment. So that's a critical step there, is to the first step, again, set it up for a bear market, and then move along and set your quality indicators to help you in your particular search. As you move down this search section, you'll come to a pattern search. And usually when you open up the program to a new search, all these boxes are checked. So you want to do is uncheck the boxes, and you'll end up with a head and shoulders pattern. Okay, that's the pattern we want to look at. So after that is selected, and you want to make sure that you understand